resources. My name is Maureen. I invite you to share your names and where you're located, who you're representing here. We're here to talk about how to prepare to file 2023 taxes. Pardon me, my cat has a lot of interest in taxes here. This presentation is a collective work of 3 organizations. One is DAWI, our partner organization. The mission of the Democracy at Work Institute is to expand the worker cooperative model to meet the needs of workers locked out of good jobs and ownership opportunities, especially BIPOC, recent immigrant, and low-wage workforces. We are a movement-based think and do tank supporting worker cooperatives to grow to a scale that creates meaningful change in the economy. And I want to thank Made and Yadira for collaborating in this session and helping with the design, and to other collaborators who have not able to be present today. Another partner is the USFWC. We are the only national grassroots membership organization for worker cooperatives in the United States. Our mission is to build a thriving cooperative movement of stable, empowering jobs through worker ownership. We advance worker-owned, managed, and governed workplaces through cooperative education, advocacy, and development. And I represent a group called the Co-op Clinic. And take advantage of this moment to say, if you're a co-op and you have any questions, you can get the counsel of 60 counselors and peer advisors who have technical assistance services to provide to worker cooperatives. We are a member of the USFWC. We have a network of peer advisors, all with strong social and professional ties. And we're going to be present at the conference in September in Chicago, and I'll tell you more about later in the webinar. And we have support that we can offer members to attend this event. And our third partner is Daniella Preisler, and I'm going to pass her the mic. And I want to thank each of my partners, John Michael, Ellie, and Raquel, who are present to support this program and who support all the programs that we offer across the United States. Thank you. Dani is, it's always entertaining to talk about taxes with her because she makes it feel less stressful. She is originally from Chile. She's a cooperative development consultant since 2017 and a certified coach and trainer. She is also a worker owner of a cooperative called Colmenar Cooperative Consulting that provides consulting services to cooperatives in their effort to create democratic economic democracy. The former worker owner of the Home Green Home. She's the vice president of C Coop America's board and president of C Coop North America. She's also peer advisor of the Co-op Clinic program. It's a pleasure to have her present, and I hope that you're able to learn a lot from her here. Just so you know, we're going to have about an hour and a half talking about taxes, and then at the end of the session, we're going to offer a brief summary of a new law, called the Corporate Transparency Law. Just so that you know about it, so that you don't have to stick around to the end, but this is the first time that you're hearing about this new law that will affect co-ops in the United States. I suggest that you stay for that brief presentation after this tax presentation. Thank you all um, to all the co-ops that are present here, and I hope you enjoy this presentation. Thank you, Daniel. Thank you for the introduction, Maureen. Yes. Yeah, it's not real important that I'm really entertaining, but gotta try to do something to keep your attention on this interesting topic. So I'm talking about taxes from a perspective of trying to understand the process of taxes. And that's what motivates me when I talk about these topics. I have to think about that we're learning a little bit more about what this system is about. So the agenda today is that we're going to talk a bit about the, the business documents and where these where this process comes from. We're going to um, talk about uh, the or direct this to co-ops that have an LLC structure. So this is a presentation focused on those kinds of co-ops. And we're going to talk about the process of declaring one's business tax, and we're going to also talk about the declaration of individual taxes, individual tax returns, and how that process occurs. And then we're going to have a little bit of Q&A, and then the brief presentation with Marie. I'm going to confirm my speaking language. I need to pardon me, there's a little box is showing up here in Zoom. It's asking me what language I'm presenting in. Okay. Indicate there, they asked me to confirm what language I was speaking. Okay, great. Pardon me. Uh, so first of all, we're going to do this. Next slide, please. Disclaimer. So that you know that I am not an accountant nor tax professional. This is a presentation for informational purposes only and not for the purpose of providing legal or accounting assistance. It, it is just for you to help you understand the process and to analyze it from that perspective, from perspective of understanding and not memorizing all the details. So any legal or accounting financial counsel that you wish to access, we recommend that you find that for your specific situation. Next. Perfect. Thank you. Okay, we're going to begin talking a bit about this process of tax return for co-op businesses formed as LLCs. And we're going to talk about the business documents that they have, the structure and the process and important dates, and the steps and decisions that we need to be attentive to. We want to understand the particular structure of LLC co-ops. We are a co-op that is registered as an LLC or a limited liability company that is managed by its members and not through a manager or a boss. This is important. This legal structure that the co-op has and the important documents that they have that structure these types of co-ops are the Articles of Organization, which is the first document you get when you register an LLC in the state. You put basic information about the organization there, that what its name is, what it does, where it's located. That's the first document. And there, the important thing to note is that you want to confirm there that you are a company that is managed by its own members. And then there are different requirements in different states. This is in California, for example, it's not required that you have an operations agreement, but if your state does require it, then it will be asked for. It will have your If you want to have a business bank account, for example, you'll need to provide this agreement. This is like a contract among the members of the LLC. This is what our goals are, where we're located, how we govern ourselves, the different forms that our governance structure has approved together. This is the operations agreement. This is where you define who makes decisions and who the different roles are within the LLC. You'll need that in order to open a business bank account. The third document uh, is sometimes understood as part of the operations agreement, and this is the policies manual. It might be called the membership manual or a members manual. There are different names. Those are the three documents where we will see the governance structure of a business. It's also, when we're talking about taxes, we want to talk about knowing the finances of your cooperative. We'll have two documents that are two reports, let's say, that are important to have, so that tax advisors know what your situation is. One is your statement of income, the other is the balance sheet. Uh, don't recommend that these are issued more frequently than once a quarter, but it should be at least once a year. I won't get into a lot of detail about these reports, but in order to understand these statements, uh, this is where you'll see your profit and loss statements that have come into and out of the business. And that will say at the end whether everything was covered with the finances that you took in. And this, if there is some amount of profit, there's a yeah, pardon me. I'm a little sick. I'm feeling my voice is a little tired, but so I'm not gonna get into details here. I'm not gonna review the chat either. Let me know if there are any details there that you'd like me to address. So the balance sheet and the profit and loss statement says that at the end of the fiscal year, how the co-op is standing, how much it owes, what the assets that it has, the passive assets, the debts that it holds, and what it what capital it holds. All of these documents are the financial documents that will help our accountant. They're documents that are needed on an annual basis in order to prepare taxes. So in order to so it's important to know that that capital accounts are not separate accounts, but they're within the same account of the business account. In an accounting means, it can use whatever program you use. It might be Waze or which is free, or QuickBooks, or the one that we recommend a lot, but it's sometimes expensive. And so Wave is another option. It's free. And another is called FreshBooks. It doesn't have as good of features, but these are reports that the reports that it can issue are a little more basic, but there are reports that you can offer your accountant. So through QuickBooks or Waves or other platforms, this is where we can create these different capital accounts for different um, worker owners to indicate their share in the company. And you can see the work to put in. We can see this initial contribution to the co-op. We can say it might be $50, say, or it might be 5,000, whatever it is for the co-op, according to the business plan of the co-op. This is the first thing that gets put into the capital account, and then we have the profits and losses, the allocations that are designated there according to the distribution agreement. So when one closes out the books each year, if there is a profit, it gets moved into that capital account, and that follows the stipulations of the financial documents, which will your accountant will say, will find where it's stipulated there, and see if this is allocated on an annual basis or it's indicated um, on a per worker basis, or yes, it is. Okay, so these are the capital accounts. This is important to understand. We also have the tax structures that we need to understand. We all pay taxes as, let's see, that LLC doesn't pay taxes on sales or income. What it pays is a fee that it pays on an anticipatory basis that happens at the close of the active year. It doesn't happen there. It is paid ahead of time. Well, it depends. If you just began, if it maybe 3 months of since being registered, that might be a little bit different. But if it's registered in November of 2023, for example, that company will have to pay all of 2023 this amount. And not all states charge this franchise fee, and others do not. For example, California requires $800 annually, and those 800 need to be paid, or so each one needs to pay according to what's required. And so if my co-op uh, in- there are certain situations where the co-op doesn't need to pay for the year. And so this depends on whether it's a partnership model and whether it's a pass-through uh, model. This is the model by which these taxes are paid. This means that the co-op doesn't pay taxes itself, but that these are transferred to each member. And that is what the bookkeeper will do at the end of the year. They'll designate the plan according to what is designated in the operations agreement. This is how they will decide how to register this in the books at the end of the year. And so it's important for us to understand how the year-end account closure happens, because that will impact how the LLC designates its taxes. And that's how you declare to the IRS how much was generated in profits or losses, sales. And that will show how much each member has to pay for uh, these earnings. And so this fee is charged on a state by state basis. And it depends on where you're located. So that is part of the structure. We pay taxes as LLC as a company, um, and as a pass-through as well.
So we present where we're going to report what were the gains, losses, deductions, credits that the business had. All of that is going to be file, so that's why you need the report that you're gonna get the information, and you get the Form 1065 for the IRS, and the deadline to present is March 15th. It's important to understand that this is the date to file the declaration. To pay it is April 15th, same as what we pay. The every year, everybody can ask for an extension of 6 months, same as an individual or a corporation. No, maybe not a corporation, I'm not so sure. But an LLC can ask for 6 months, and it can you can pay it by October 15th. Allocation of profits or losses in the capital accounts of each member or company equals the reserve fund. And this is important we're going to see it in a little drawing so that it's better explained. But when we allocate profits or losses in these capital accounts, where we also put the initial contribution that we put in the business in those capital accounts, all of that is going to be a reserve fund. So when we make the decisions about distributing this money that we're getting, that's when we have to think of how much we want to leave behind as a little cushion for the business to sustain the stability of the business, because you have to have a cash flow, you have to have money circulating within the business in the case of a client not paying or anything happening. We can cover and fill our responsibilities. So that's why you save this little cushion. Next. Great. So to understand it in a more fun way, the the flow of revenue from clients to members. So the money comes in, I pay for my service as a client, and that goes into the operating account of the business, which is the account, and these are the revenues that we have within the co-op. From there, you're going to go to pay. A portion of it is going to be guaranteed payments to the workers, to the worker owners. But here you're going to pay per hours, or as stipulated, it's a percentage or per hour, however we've guaranteed these payments to be. And then the other part is going to go to cover all the expenses that the business has, whether they're direct or indirect. That's what it's going to cover. And that's where it's important to understand when we do this analysis to how we price our service or product. We have to understand that this is the part that has to be covered to have enough of a percentage to cover these expenses. You usually keep a percentage for the co-op of 30 or 40% to cover these expenses, and to also have space to have some revenue. So to retain 40%, 30-40%, that's a good amount to keep for revenue for the business that's been calculated for the product or service that we're providing. So we cover all these areas. We cover the workers. We cover the expenses, whether they're fixed or varied or variable, and then the allocation of revenue at the end of the year. And so if there's a little bit left over, that's going to go to the revenue allocation. So when we get there, we say, okay, we have a certain amount of profit, and it gets allocated or distributed into each capital accounts for the members. I'm going to be paying taxes for both things, both for my hours of work, what I got as guaranteed payments, and I'm also going to pay taxes for my portion of that earning of that revenue. Why? Because the LLC closes. It is for the one fiscal year from January 1st to December 31, and then the fiscal year closes and it starts at 0 for the next year. So all the money that's within the business has to have a name. The LLC doesn't keep money, so all the money that's within the business has to have a name. So what we lost, what was allocated from the earnings to each capital account, that's my money now. So now I have to pay my taxes for the year in which that money was made. Whenever the year that I generated this income, that's when I'm going to be paying taxes for it. The importance is when I allocate that money further on, that's that's free of taxes and that's important to understand. I'm gonna do an exercise on the next slide. A little bit to understand better. It's basic, but it's just for us to understand better. So for the annual business income to the member K1 form, how does it work? So the example is for a co-op annual income statement. Basically, let's say that the income generally, gross receipts was 125,000. That's what we got in income. From this, 10,000. Sorry, the expenses were divided in 100,000 for guaranteed payments. That was what was paid in guaranteed payments throughout the year. And office expenses, what we were mentioning there are fixed expenses, that was 10,000. So 110,000 covered all the expenses. And so then we had a net profit of 15,000. So that's what was left over that fiscal year. We got 125, we paid in hours 100,000, and we paid in the office expenses 10,000, so we were left with 15,000. So let's say this is a co-op that has 10 members to make this easy. So we're going to go over now how this is going to look in the K1 form. And this is seen, I don't know if you can see more or less the numbers here. Yeah, maybe. But can you see it? Yeah. Are you able to see the form? Are people able to see the form? A little bit. A little bit. So it says the name of the person. It's fictitious, so we'll just leave it like that. But it says in the top part in this K1, it says, all right, so there's 10 of us, and I got from these 15,000, it's divided, so I got 10%, so I got 1,500. And number one from our document, let's see if we can, letters very small. I'm not sure. Those of you that are seeing it on the phone, I don't know if we can do much, but maybe in the computer you can make it a little bit bigger. Maybe on the phone it's a little bit too small. But we'll be sharing the slides later on, so you'll be able to see it later on. On this side, I'm going to show. I'm not sure if you can see my mouse. But in part number 1, you're going to see what is mine from the earnings. So it's 1,500 because there's 10 of us, 10 members. So I've received 10% of the 15,000 that were the profit. So I got 1,500. Why? Because our operating agreement says that it's distributed in an equal manner, the profit. So from that, in my guaranteed payments, we also pay ourselves, let's say, in an equal way. So to make this easy, so let's say that the 100,000 that were paid to everybody, each person got 10,000. 10,000 in guaranteed payments. So here it's going to say 10,000. So I had 10,000 in hours, and I had 1,500 in earnings at the end of the year. So what I have to pay in taxes is on 11,500. So what I earned in guaranteed payments in hours, but also what I got on my part from the earnings. So 11,500 and 14A, it's going to say the exact amount on which I have to pay taxes this year for this K1. So this is one of the forms that we receive. It's not the only one, but it's one of the ones we receive for being worker owners of an LLC co-op. This is the document that we will be receiving, the form. So for example, if I'm an employee at a business, I'm going to get a W-2. If I'm a contractor, I'm going to get a 1099. So there's different forms that we're going to be receiving when I'm going to be preparing my taxes. So this is for this business, is K1. So we will have room for questions at the end. So what's the process like? So now we understand we're an LLC that's being managed by its owners or members. The way to pay taxes is going to be through the pass-through. It's where taxes on the revenue taxes on the revenue is paid by members. Members are the ones that pay the percentage that we earn or that we generate in earnings. And at the end of each year, we're going to get a K1 where we are going to understand what we're going to be paying for our worked hours and then for the income that was generated for the profit. If there was a loss, then that's something else. If the agreement says that losses are distributed the same as profits, the same for everyone, then all right, I'm going to get that. If there was a loss, instead of 1,500 in favor, it might be 1,500 less. So, and that would affect the taxes. So that's another part. So the process itself, and this is important to understand how we're going to be getting to that moment. So December 31st, during the year, we've been doing our work. We have a bookkeeper or ourselves. We've been doing our books, and maybe we were using a platform, but we've had we have the registry in Excel, or I recommend you use a platform. But if we haven't moved on to a bigger platform, if you're still using Excel, that's okay. But we've had all the income and everything has very, very documented, and especially the receipts, which is the backup or the proof of that accounting. So on December 31st, we're going to be closing the accounting books. 31st, they close. So in January, we're going to start reviewing all the activity that happened between January 1st and December 31, in this case 2023, to understand what came in, how much money came in, how much money went out, if we have any debts, if we were able to pay any debts, if there was any reconciliations, if we're going to maintain, if there's going to be a program. You have to, once a month when you get the bank account, you have to make sure that the income and expenses from the account are the same as my registry in the reconcilings, whether it's an Excel sheet or anything, it has to be the same. And if something is not matching on my end or the bank's, then that has to be sent in that moment. You shouldn't wait to the end of the year to fix that. So we have to, whether our business is really small, we're generating very little, it might be every 3 months, and that's fine because we're generating very little per month. So we also have to save in expenses and everything. So we maybe do it every 3 months, but that's the top. The rest ideally is to do it every month to keep at least a cash flow registry, to know exactly, at least on Excel, what came in and what went out of the business. And as one is getting loans and things like that, that is more complicated. So it's important to have a platform by then, whether even if it's one of the free ones. I think this through has had really good reviews. So that can be another platform that could work. We want to know all the categories of the incomes and expenses, all the bank statements monthly, and the registry. We also have to understand if we have distributed early any part of the profit that we have generated through the year. It is important that that is also recorded, that there's a record of the capital contributions, the credit, capital, everything has to be documented, and that's called closing the books. So we close the year, we close the profit and loss, we know what came in, what went out. We've done the reconcilings month to month or every 3 months, and the year has closed. That is done, and there isn't any any disagreement or discord with the bank. And on the other end, we also have to have, if we have asked for a loan or if it was paid back and if people were contributing their initial contribution to the bank, we also have to have the copies of that, etc. Then next. I'm still enclosing the books before. So once you have all the accounting done to date, we're gonna generate the reports that I mentioned. It's gonna be the profit and loss and the balance sheet for the year. And in case of an audit, the most important thing is that you have all the receipts that are bigger than $65. That's going to be asked. If you lost a receipt that was like $20 for parking or whatever, that's not going to be an issue. But an audit, everything that's over $65, they're going to ask for that for the receipt. Best take photos because receipts get old, so it's better to take a copy or a picture and put it up on the drive, in your drive or wherever you get your documentation online. Now next, we were talking about the 1099 forms. First of all, it's closing the books. That's number one, because that's when you're also going to generate, we're going to say if we pay professional services for someone, this is when we have to report and we have to generate the 1099 forms. And the first date that has this process every year, and that's January 31st. So by January 31st, we have to generate the 1099 forms for people who have rendered a service that's over $600. So if we hire someone that did something that was $800, that person needs to send us a W-9 form, and our tax preparer is going to generate a 1099 form for them for the service that they provided. And that's super important. That has to happen before January 31st. And after that, there's a fee. At first, it's not that high the first month, but if there's any delay of sending out these documents and someone presents their taxes before they get the 1099, that's complicated. There's a problem there, especially for individuals. And so these contractors that we have, when we close the year, we have it clear that the accountant is going to review our documents, going to say, okay, someone did the logo, someone did the web page and charged for the design, and someone is keeping an accountant or the bookkeeper that's keeping the books. And so that those people are going to get a 1099, and that the accountant does this, the bookkeeper does this, and turns in the document. And this document there's a very easy process. Well, as I understand it, is easy now because I used to do it, but now, and it's a process that once you do an account, you can do it. It's pretty automated to generate. And this is sent to the people, to the contractors that we've hired. So that's important to know about 1099s. Then we're going to have the profit allocation. So we sent the 1099s January 31st, and then the allocation of profits or losses. This is where we close the books. And this is when the accountant is going to say, look, there was a profit of so much or a loss of so much, or maybe there wasn't either, and we were even. But that's what we're going to understand. And that profit or loss is going to be allocated according to what's established in the operating agreement. That's important to remember. According to this, the person that's going to be doing our taxes is going to generate our K1s with the allocations as it says in the operating agreement. And that's going to go to a capital accounts. That's going to be assigned, allocated to our capital accounts. So the allocation of this profit is important. It's important what I was saying, that the percentage of distribution and or retention of the profit will be decided in a full membership meeting. So whether this profit or loss in January, February, we're gonna, by March, the taxes have to be ready. By March 15th, the declaration for the LLC is gone. So that's when we're gonna be making the decision of if we're gonna allocate or distribute the income, or if we're gonna retain everything within the business in our capital account. So that money is ours, the money that's been allocated as profit, or if there are losses, but that money is ours. It has our name on it. The important thing is understanding when we're making these allocation decisions, what I said before, to have the backup for the business, that little cushion of cash influx, so that people can really make decisions knowing that there's money that can support when someone doesn't pay, or there's a delay, or something came up that was more than we thought it was going to be. So that's what I recommend to keep present at the moment of allocating the profit.
So now we can wrap up this section and move on to the section on preparation of the members of the LC. This is preparation is an important part of the process, and there are steps and decisions that need to be taken into account. This has to do with the tax structure. That's where we'll begin. Members of an LLC file their taxes as self-employed um, in Form 1040. They pay federal and state income taxes. Normally, state taxes are lower. It depends on the state. Um, some states, yeah, it's different to each state. The federal is the same for everyone. This is the responsibility of each member or partner to pay quarterly estimated taxes. This is one of the responsibilities that we have accepted as worker owners of an LLC. We pay quarterly estimated taxes. And I'm going to explain a little bit what that means and how that process works. Next, yes. So, in earnings, it's important to understand this. When we talk about our earnings, this includes the guaranteed payouts. It also includes benefits and bonuses and winnings, earnings, profits. We are not employees of we that these benefits come out of the profits of the business. And so if I receive guaranteed payouts, if I receive a payout, this is coming out of the profit. This is a distribution of the profits. So when we're talking about anticipated profits, when we talk about anticipated profits, this amount, this payment bonus is an amount that is uh, expected that year. So we need to pay based on that, based on our expectation, those amounts. But if we were talking about distributions of retained profits, that you don't have to pay. Those, that is a profit distribution. Um, it is not an early distribution of profit. It's different. And so profit includes the portion distributed and retained in your capital account. So if we're talking about 2023, we're going to say we're going to hold 50%, or we're going to distribute 50%, maybe a 70, 73, or 60-40, that you save 60 and that you distribute 40. But you're going to pay for the entire amount, what's distributed and what the company co-op retains. And so then when it's distributed, then you don't have to pay on it because it's already been paid. And so that's the good thing, because when we distribute those, the money comes to us without taxes. And next, I'm hearing someone else here. Yeah. Okay, so we're talking about this form. This is the form we use to pay our estimated taxes. We say, oh, we have to pay this 4 times a year. No, and you say you have to pay taxes 4 times a year. No, these are estimates of the amount that when we get to April, when we pay the total, we're going to account for all of these estimated payments, and that will reduce the amount that is needed at the end of the year for the entire fiscal year. And so these forms are, it's, most people do it online now, and you indicate the information later in the form, how it's paid, and I can share the link of how you make an account and do all this, but you need an IRS account and you can pay online like that, sending your personal check with this little voucher as well. And so sometimes what I recommend that co-ops do is that they generate in their accounts a savings account for taxes, and that in every check that they receive, that they set aside the amount that they should be paying in taxes, the percentage that is that reflects their tax burden, and because that's particular to me and I'm not my colleagues. So if I have 3 dependents, for example, and they're gonna and we get charged like 15% or whatever, and that's my reality. That's what I'm going to have to pay in taxes. The percentage that is due that I will have to pay, and that based on my profits, my income, and my situation. And so you can ask that your accountant tell you how much you should set aside, and the co-op can generate this for you. And it won't be in a single account, but then accounting, it'll be one account, but then they can create this savings account for your um, taxes. And so then every quarter, 2 weeks before the amount is needed, and 2 weeks before, all you have to do is take that money, make make a full withdrawal of that account, and uh, design a check to the member so they can pay. And the members will then pay this with a personal check, because the co-op can't pay this directly. You are not employees of the co-op, you are owners of the co-op, so the co-op can't pay this for it. And so this can be held in a co-op account, savings for each payment. And these payments need to be made 4 times a year. Normally, the payment is the 15th of April is the first one, and June and September. Uh, each one can be modified a little bit depending on if there's a holiday or that's the base date. So in paying these taxes, what I send in it is a down payment on what I'm going to pay the next April. So I'm not paying extra taxes. I'm paying the same thing I'm going to pay later, but I'm advancing money to the IRS based on what I am uh, my tax burden for that quarter. And so then April comes, I've already paid those 4 times. I've made those 4 payments. It's very important that you keep track of the date that you make that payment and the amount. And then the person who pay those taxes will tabulate all this and figure out how much and if you paid overpaid, then you will get some money back. And if you pay underpaid, then you'll have to pay a little bit extra. Next, please. Mhm. So for the preparation of taxes, Using an accounting program like QuickBooks or Wave or an Excel sheet or an accounting book, it's important to categorize all your transactions. If this is all the debits and credits, if I paid some account, or if I had to pay a bill, or something that I pay as a one-off amount or a monthly fee. It's important to keep track of this, and we need to separate my charges and the business transactions. If there are particular charges that are mine and not to the business, it's important to designate these for like travel expenses that they're not reimbursing me for something. It's important if I'm a consultant, for example, and I have a lot of expenses, then I have a specific account for that, and that's where they pay me, and that's where I pay out my expenses. And that's important to separate these, to not use the same account to do to make business and personal transactions. If part of this you have other work that generates income, transfer all of that to a different account, not a personal account, and then reconcile this information just like a business company. Get bears with the information the bank has, and if this is an Excel sheet or some program. Next. So the preparation for taxes is to collect and save all receipts and personal accounts. The $55, you've got to have the receipt. Everything above that amount, you have to hold on to. It's important that the reimbursements you receive from the cooperative cannot be re-reported as deductible expenses from your individual returns. It's important that this not be done. This is a common error. This is where I have the card. It's important you get all the way into all the details and politics of your policies of your co-op. It's important that these are not repeated. These reimbursements are not repeated uh, because that can create it's fraud, um, and so that's important to keep straight. Next, individual tax returns. It's important to know, keep track of the dates. First, we have these quarterly amounts that are paid. We have to keep track of these amounts. You have to uh, submit all of these forms that you receive for your return. If you work as an employee, you'll receive a Form W-2. You have to have these forms. If they haven't been sent to you, you have to ask for them, because if you don't have them, you're not making the tax return that you need to. You need to ask for this. If it hasn't arrived, you need to ask for it. You can't make your tax return without having that if you're an employee. So, Form W-2. If you're an independent contractor, but co-op, for example, you're going to have a Form 1099. This is the form that you need to receive, that you need to include in your tax return. 1099, INT, for example, you might have if you are earning interest from a bank. There can be others. If you have a business where you invest money, then you have other forms. Another form that you might have is if I do work from home. Next, please. Here we have two basic requirements for your home to qualify for deduction. If I need to deduct this expense, this amount needs to be for the regular and exclusive use for business. No, it's not kitchen, it's or the dining room. It needs to be a place where I work. It's where my printer is, where my computer is. It's where I am when I work. This is where I have all my files, everything. So that place needs to be the main place of your business. And that's where I conduct the business. And those are the two things that need to be defined. And so within that, there are two ways that this can be done. You can talk to your accountant about how best to do this, because this can be done, and we can go on to the next slide. You divide the costs of running the house between personal and business use. For example, pardon me. Pardon. So on one hand, you can do this. You take a percentage of that place that I used of the entire house. For example, if my house is it's I have I have one room of the house, and so I take that part. This room is 1/9 of the entire house, and so that I take 1/9 of the entire expenses of the house, and that is um, and since this is a 1/9 is something that my business pays, it's deducted by the company. And that's one way to do it. And it's a little more complicated. You know, you have to like measure your whole house and the space, and you have to make all the size of the office and all the other rooms in the house and everything. It'd be a little complicated. You can also offer simplified manner way of doing this, a $5 fee per square foot for commercial use of the home. And if this space that you're using, when I make this calculation, is more than $1,500, this simplified calculation can't be used. I need to do a complete calculation. But if it's under that, then that will be preferable to you. Next, please. Perfect. So this is the question. How much tax will I owe? This is a question, but like how much do I have to pay? People always ask, right? We want to know this. Little to just understand, a bit to just understand the situation. A few general guidelines. Each individual is a little different, but we need to be, most single co-op members should plan for about 25% tax on their combined annual guaranteed payments distributions. Members who have dependents should plan for about 20% in taxes if they have one child, 18 if they have two children, 15 if they have three or more dependent children. That's more or less, but always consult with your accountant, because if you do your taxes with your spouse, it might be a little bit different. You'll need to figure out how much you need to deduct, because 25% or 20%, 25% is a good estimate for single co-op members. If we set that apart, then we'll have a return at the end of the year if we have dependents. Um, the, the the IRS give you back the money if you overpay. And so if your spouse in the place where they work, right, they work somewhere, and the employer says, how much do you want to set aside for taxes? Let's say 15%. Because I have dependents and I don't need to withhold much. And they're withholding just a little bit, just a low amount. It's going to affect me, right? Because then I need to set aside more I need to withhold more so that it's actually fully covered and we are cover our full tax burden. And so when you talk with your accountant, maybe you talk with your spouse and decide. So if you're not working with an accountant, then and you do it yourself, then you need to talk with each other and you decide how much we need to set aside monthly, how much do we have to pay, estimate our tax burden in order to. And so if we set aside a lot of it, or on the other hand, if your spouse is withholding quite a bit, then it'll also affect you. You won't have to withhold as much at the end of the year. And so to wrap up here, and so we can get to your questions. The more detailed the information is provided, the easier it will be for your tax preparer and accountant to do their job without errors. Mistakes of the IRS can be very expensive, and so the most important thing is that you have to recognize the responsibility that you have with your LLC, and that you pay the taxes based on your sales, your income, and set aside all of this information and pay your estimated taxes, check your bank accounts, and ensure that this is all logged in an Excel sheet, for example. That's what I recommend, so that sometimes it takes time and it's a little bit of a challenge, but try to do it because it's something that you'd have to do. And if you don't and you just do it at the end of the year, you're gonna have to do it all the same, right? And so this is all the receipts that you have, all the forms that you receive, save them, and all of your expenses, charges, make copies of them because the ink can fade. These are all my recommendations. I'm going to send you more information, more details that might be helpful for you about how these taxes are paid, and I'm going to send that with the presentation so that you can learn more about how to pay your taxes. Thank you.
Questions? Thank you. There are 9 questions through the chat, and I'm going to read them out so that they can be interpreted. Should we stop presenting so that we can see people? Great, thank you. And thank you so much for the presentation. The first question I'm going to read in English. Wave has, what you have to look at in these platforms is for them to be compatible to transfer it to another platform. It usually says, I think Wave says it, but if you can download all the information to, I forgot if you can save the information, not as Excel, but as a LCV, I think it's called, where you keep the information, it's like a format. I don't, LCV or CLV, my head can't come up with it, but as I understand, Wave does have it,
CSV.
but that's what you have to check. And so Wave has it, so I can transfer my information in that format, and that format can be uploaded to QuickBooks also. So I can recover that information through QuickBooks too. Thank you. Next. I sent the question through the chat, Danny. Let me read it again. I'm not understanding this. What is the contribution of capital? Could the person that asked this question, it's from M&LCN.
Excuse me. S- Sorry for interruption, but we can't hear the question in the English channel. So it's not gonna be recorded. I mean, we can hear the translation when they are responding the questions, but when you are putting the question in English, we can't hear, not even the interpreter. So maybe because you need to change the channel, if you're gonna speak in English, change to the English channel. So in order for us to hear the question as well.
I will.
Sorry,
say
this is the interpreter. You shouldn't have to change channels to speak it out loud, but maybe if you just want to read it out loud again in English. No se necesita que cambie de canal para hablar, pero a lo mejor sí la puede leer otra vez en inglés en voz alta. Gracias, thank you.
Some people can hear, some people can't. I'll be repeating the questions that we've gone over. I'll repeat them in English so that they're interpreted into Spanish. The first one is,
I am not sure. Hang on.
membership payment is recognized as an income to which you so you have to declare it as taxes. Membership payment. So the capital contribution, the initial capital contribution, is that what you're referring to? I'll send you the question. So that payment is going to be registered in in the books. So it's gonna be registered as part of your invested capital in the business. You don't pay taxes on that. That is part of your capital in the business that goes in the balance sheet, not in the profit and loss. Okay, great. So I'm seeing a lot about the articles. Okay, as I understand it, what's better, keep going in Spanish or people in English? Article 2, capital contributions. There's an initial contribution that's 18,000. As I understand, is to maintain and that's reflected in the capital accounts that exist. These 18,000s that are there as cash, that's it.
Lamentablemente las cuentas de capital va a fluctuar, ¿no? Por el tema de que van a estar recibiendo los
The profits or the losses are going to be reflected there. Now, I think that a way that that's maintained fluctuating in the same way for everyone so that there's not an capital interest different for people, that could be that allocation can be done equal, whether it's profit or losses. So that can be very normal depending on the type of industry, and for other types of industries not so much. So as in a specific case, if it really makes sense to allocate in an equal way, whether it's profit or loss. There isn't a way to maintain that contribution in just one amount, because each year there's going to be an exercise, a financial exercise in the business, so that's going to fluctuate. So now the capital or the people's voice, according to this, it doesn't work like that. So people's voice is maintained because it's structured as a co-op, and each person has a vote. So the interest that varies in the capital accounts shouldn't affect the vote or the voice that each person has, their vote, because that is in the governance and that's established within the governance. One person is one vote. So I'm not sure if there's another reason for which you wouldn't want these capital accounts to fluctuate with other money. But as the capital accounts work is with the initial contribution, and then each year with the profits or losses that each fiscal exercise generates. So that's what I can say as far as that. I'm not sure if I was able to respond a little bit.
The next question from the chat is, what happens if I haven't been filing 1040Es throughout the year?
1040ES. Oh, no he hecho ok. Bueno, si no hizo ninguno durante todo el año.
If you didn't file any of the 1040s throughout the year, you're probably going to get a fee. Unless it's the first year of the business. Sometimes the IRS doesn't look that way or looks the other way. So like the first year, etc. But if you didn't contribute any money throughout the year, what's most likely is that there's going to be a fee. There's going to be a fee. The first one is not that high. If it hasn't happened before, I think it's $90. I'm not sure, but it depends. I don't think that's changed. But the first time, maybe the IRS doesn't pay attention. The second time, it's not going to be the same. They're gonna charge a fee.
The next
or a penalty. I would advise that if you don't have the money in the moment, to try to put together some of the months and at least send one at the end with as much closer the closest you can to the amount, so that you don't have any sort of penalty fee if you weren't able to do it quarterly. So what I've learned in my experience is that when the last payment, the fourth payment, is closest to the reality of what you earned throughout the year, that in percentage, then there isn't any penalty fee. What the IRS, what they want is to get the money in advance, closest to reality as possible.
Thank you. The next question was, do I pay taxes on total profit for the year allocated to me? Or do I only pay taxes on the percentage of that allocation that I receive in cash during the year?
When you, so you're gonna pay when you, perdón, cuando los, cuando los,
When
asignan las ganancias
the
a cada una de las
profits
cuentas,
are allocated to each one of the accounts, I pay the total of what I receive. That's going to be a percentage of the total profit, and that's going to depend on how it's written on the operation agreements. But if it's equal, then we're all going to be able to pay a percentage. But if not, if it's according to the hours I work throughout the year, then the percentage is going to be according to that. But what's allocated to me, that's what I have to pay. There isn't whatever's allocated to me, that's what I pay for on my capital account.
Then thank you. There's 3 questions left, but the chat's popping off. The next one is, could you explain what it means to reconcile accounts?
Ajá. Reconciliar las cuentas significa,
Reconciling accounts means bank-wise.
reconciliar significa que
So reconciling means that I take 2 documents and they have to say the same thing. That's reconciling. In the case of what we have to do monthly or quarterly, it's the bank account for the business has to reflect what I have on my platform, or if I'm using an accounting platform, or on my Excel that I've been keeping. So whatever expenses have to be the same, income has to be the same, and according to that, I have to have the receipts that prove this income or expenses that I've had. So if I've had an income, I have to have a copy of the invoice that generated that income, or the receipt that generated that income. Or if I have a payment for something, I have to have the receipt for the payment for that account, or a statement that generated this payment that I had to pay. So reconciling is that I have to have everything that's backed up, and that both lists or both documents have to say the same thing. That's reconciling.
Thank you. I can see the person who asked the question nodding. The next question, which I sent to you via the chat, Denny, is, in what ways, if any, can various expenses that fall on individual members due to the LLC structure, from additional tax preparation costs to even medical insurance or coverage, be paid by the LLC as legitimate pre-income tax expenses?
Interesting. That's like that's like a tax, a CPA question, but I'm gonna try to say, a ver. So, en una LLC, por ejemplo, hay
So
costos.
in an LLC, there's expenses. For example, if we have the dental and vision with the federation, it's an expense for the business. But in reality, it's a coverage for each member. And for me, I've had this conversation with the accountant, with the person that does our service, and for her, it's an account that's like a guaranteed payment. So it's something that we have to count as guaranteed payment. So for me, that as a bookkeeper, I would say, no, this is something that the business is paying for as a benefit. But of course, there's the situation that because we're an LLC and we're investors and we're not employees, it's an expense that the business has to specify under whose name they're doing this expense, because we're investors and we share this. So it's tricky. I would talk to the CPA. And there's things that can be done. And for example, the office, perfect. That's like a fixed expense. We all have to pay the business expense. And all the expenses that are according to that, the for an attorney, for an accountant, or all of those are within the business expenses. And when it's about specific things for members, that's when it gets tricky. That's when it's a guaranteed payment. It's like a bonus or a benefit. And at the end of the day, that's a payment that's being given to each member through the business. So I would say, and it can be deducted later. It can be deducted from our individual taxes. That's the good thing, that all the health expenses we can claim on our individual taxes. So it could be like a guaranteed payment. If I understood the question, that would be my answer. But I would talk about it with an accountant because I have my reserves on that.
This was the last question from the chat, beyond a particular question that we're responding to via email, which is, under what circumstances would one need to file a 1040 ES?
And the what's it does is we won't need to file?
Yes, does every co-op need to file that estimated tax form?
Yes. Every self-employed business owner needs to file that. And
Gracias.
that's esa es como nuestra, ese es nuestro, como nos
This
reconocemos.
is what we recognize in tax payment as an owner of an LLC.
Muchísimas gracias, Dani. Vamos a
Thank you,
cerrar
Dani.
esta
And we're going to
porción
wrap
con
up this
respuestas.
section
Y,
of Q&A.
bueno, espero que ustedes se sientan más
I hope
preparados
that you
para enfrentar los
feel more
impuestos
prepared
este año. Y si no,
to
voy a compartir
take on your taxes this year. And if not, I'm going to share how to access
de asesores que incluye la
technical
Daniela
assistance from
y
the
he
Federation.
varias veces y cada vez aprendo algo que
Daniella Preisler has given this presentation a number of times, and each time she gives it, I learn something that I had forgotten from the year before. And so I hope that you have some time to rest and recover so you can feel better too, Dani. We're going to move on now to talk about a new law. So you can either go now or stick around to learn about this new law and also some events that we have to come within our network. So thank you again, Dani. And now we're going to talk about this information, about this new law. Yeah, we'll share a recording afterwards if you are tired. I'm also tired, but we're going to continue here to talk about federal laws that affect co-ops in the United States. And I'm going to share my screen again. And let's see how. Here we are.
Should we keep recording?
Yes, I think so. Gracias por preguntar.
Thank you for asking. Okay. This With the last half hour that we have, we're going to review something that, even though it's not taxes, has to do with this process of having all of your paperwork in order. So that you know, the Federation, with our partner organization DAWI, is researching resources and gathering information about this act, this law, the Corporate Transparency Act. This is a new piece of federal legislation that came into effect the 1st of January 2024, and it affects most small businesses in the United States. The Corporate Transparency Act established an information program about something called beneficiaries property, BO, and so this is something that is governed by FinCEN, a group that is that governs financial crimes in the United States. Why am I talking about all this? Because the program requires reports on individual reports on people who exercise significant control over a business, and they have in the co-op. It may not be clear who it needs to be informed, and with workers, this can be especially tricky to understand because there is not a single owner. So it's important to understand this new legislation and submit these reports to the federal government. You have until the January 1st, 2025 to report. And so new businesses, if it's a co-op, if it's whatever, after January 1, 2024, that incorporated after the start of this year, or in the 6-7 weeks before, have 90 calendar days to report starting from the date of incorporation. But for co-ops that existed before this past year, have until January 1st, 2025 to report. And so if you reported the year before or before, but new co-ops need to pay attention, and especially if you are a member of a new co-op, that is to say, a co-op that incorporated this year in January or in February, or others who have heard of this law, that is your first time hearing about it, you should attend this webinar that we are going to put on Monday, focusing on this law for worker co-ops. The Cooperative Clinic offers, as we mentioned in the chat, a half-hour free support navigating situations of technical assistance that your company, your co-op might require. But with the specifics of this law, I'm going to leave to in the more capable hands of my colleagues in the clinic and DAWI to say how this will affect you. So that's a brief summary of this new law and how it will affect us. And we're going to share more information about what we know, but Monday we're going to share more information about what needs to be done for and by new and existing co-ops. And if there are more opportunities for learning, you have more energy for learning, every Wednesday we have a webinar called the Worker Cooperative Startup Webinar. It's held in English. The next one is the 6th of March. And every 2 months we have it in Spanish. The next Spanish one will be the 29th of April. And we also have the Movement Council we're meeting at the Movement Council for Immigrants and Cooperatives, and that's held in Spanish. And that's for new members of this movement who can participate. This is the movement called Movement to Immigrants and Cooperatives. That will be held on the 21st of March on Zoom. And for all members, save the date, please. We're going to have our spring member meeting on May 17th. And all members and non-members are invited to the conference that we will be holding in September in Chicago. This will be an opportunity to not only meet other co-ops, but also lawyers and accountants and counselors who can help you and locate you within the state, meeting other co-ops in your place, and also locate yourself within the movement because there are usually a lot of people there, especially. It's really nice to attend sessions with a little more time and space, how to navigate finances in co-ops, conflict, governance, topics, statutes, the resources that you need are usually available there. And with that, I'm going to stop sharing my screen and ask you all if you have questions about this new law, questions for the Federation, questions about this webinar, and if not, I'm going to give an opportunity to offer us some feedback because it's important for us to learn how we're serving you in the movement. And so if there are questions, you can unmute yourself or you can put them in the chat. And I'll also share a little evaluation that you can fill out to give us your feedback. Pardon, we're both a little sick and we're functioning with low batteries here, but thank you, Raquel, for sharing how to register for this webinar. Maybe there will be fines for those who have not done these processes correctly. This law will affect how you take care of all of your paperwork as a co-op. And here you have a link for you to provide some feedback for us. If you have any questions or comments, feel free to unmute yourself and share them. Yeah, can we ask a question? Can I ask a question to Anita?
Oh, sí,
Yeah.
Dani, quería saber,
Dani,
muchas gracias por la
I wanted to know, thank you for all that information.
pudiera explicar de vuelta
I was wondering if you could explain again. At the end of the year, you mentioned that we don't need to, the LLC shouldn't have money in its accounts. How do we save or set aside the dues? Or do we have savings? How should we distribute those profits at the end of the year? Yeah. Well, we shouldn't have money in the accounts that is not someone's. That's the only money we'll have in our accounts. But all the money that's in the account at the end of the year has been assigned. Everything that came in and went out has something that backs it up. The receipts or the invoices, everything that we had to pay. If I have profits, then that money is going to be designated in the capital account of each member. After preparing taxes, within whatever platform you're using, or in the tax transaction that you do in those forms, you'll put the amount that are profits, and this will all be designated in the capital accounts. And everything is been assigned. There's no loose money. The LLC doesn't have the ability to have an account for its own funds. All the funds have been assigned, and they're held in someone's name. It's a way of saying that we're back at zero, right? The fund in an accounting sense, it's at zero, but it doesn't actually look like that in the account. Does that make sense? Yes, that clarifies everything. Thank you. Yeah, pardon me for any confusion.
¿Hay otras preguntas? Nos
Are
quedan
there any other questions?
16 minutos.
We have about 16 minutes left.
Y si no, les vuelvo a
And
recordar
if
que vamos a
not,
compartir la grabación,
I'm going to
que va a tener también, digamos,
I'll remind you that we will share the recordings and the slides. These are
recursos más que,
exclusive slides that
nos
are
va a dar
resources
y va a haber
that Danny has
información
given us,
por correo electrónico con más
and
recursos. Gracias
we
a
will
nuestro equipo de
share more
comunicación.
information by
Vamos a
email.
compartir,
Thank
la
you,
última
our communications, thanks our
diapositiva,
communication
esos
team,
eventos que
and
pueden asistir.
also we'll
Mirarlo
share
nosotros,
information about
los
these upcoming
coordinadores.
events
Y
uh,
bueno,
to
mientras yo hago descanso y
keep
todo
yourself
eso,
informed about the
pero
latest
sí pueden
developments for
llenar este
co-ops and your
formulario
businesses.
de darnos
And thank you for
feedback
filling out this
acerca
feedback form.
y con eso
It would be great
voy a
to
cerrar
hear
la presentación,
your
dar
thoughts.
a
And with
nuestros
that, I'm going to
intérpretes
close this
un aplauso y
session.
cierro un trabajo.
And give a round of
Muchas
applause
gracias.
to our interpreters because they've done a great job here for 2 hours. And many
Representarnos en
thanks to
cooperativa
all
y
of you for representing your
ponerse al
co-op,
día de todas las necesidades.
for staying up to date on
Dentro
all
del
of
cooperative.
the
Súper fuerte.
needs and demands that are put on
Importante
us as
día
worker
que
owners.
tiene este movimiento para el
That takes, for putting in all the energy that it
gracias a
takes
todos por haber
to keep
asistido.
this movement
Gracias
moving
a
forward.
la Federación de DAWI
Thank you
y
for
Limited
having
Liability
attended. Thank you también
Company.
to the
Algo difícil de
National
gracias
Federation
por
team and Atilda team as well. Thank you for
tenemos que
interpreting.
acabar ahora mismo y
We can stop recording
vayan ustedes
and,
y disfruten.
well,
Buenas noches.
y'all can have a good evening.
No me hicieron así, me imagino que no iba muy
Um,
rápido.
I don't know.
Menos mal.